So starting here on the 12-hour chart, I'm using the higher time frame for the direction, then entering my mechanical entry on the 15-minute chart to get involved in that direction. My 15-minute strategy is all about reading the direction. I make money when I read the direction correct, and when I lose, that's when the risk management comes into play, so I lose small. As long as you have a strategy that has a positive risk to reward and you're correct on the direction 40 to 50% of the time, you'll have a profitable strategy. So on the 12-hour chart, this is a mitigation from a sideways range. This whole green area is a sideways range. You've initiated this point of mitigation we've come back to in the future. This is where we know all the orders are created in the market, where we see reactions. We can see that we've created a fractal low in the market, which is a turning point within the market as well. And we're seeing bullish order flow coming into play here as well. Bullish order flow is range, initiation, pull back into that range, mitigation, and potential continuation, which then means we target that high. This is a bullish order flow pattern. This is a bullish continuation pattern. So we can see it happening here, sideways range, initiation, mitigation, continuation. And we can see price has created a new sideways range, initiation. We're pulling back into that sideways range now, so we're potentially at that point of mitigation for a potential continuation, and then price targets this high if that is that continuation. So that's the direction that I'm playing to the upside. This is the sideways range. We've initiated, broke structure. That gives us our footprint, shows us our intention for higher prices. And when we pull back into this range, all I'm doing is looking for a range or a buy order that I can create a narrative from. I don't have to be specific. I just have to have an area where the market could turn. Then I can use the 15-minute to show me when volume comes into the market. Then I can execute with a 10-pip stop. It's the NJT community already utilizing the 15-minute strategy inside our Discord channel. It's a very simple strategy to learn and apply, and already our traders are seeing new ways to get involved in the market utilizing the 15-minute. These are new traders and experienced traders absolutely killing the markets with a strategy that suits their personality. So on the 12-hour chart, we have this whole sell to buy candle, which is this whole down move from the high to the low. That's a sell to buy. So this gives me a general area that the market may start to turn from. So that's all the work from the higher time frame done. I know I'm looking for buy setups on the 15-minute chart. So now down onto the 15-minute chart. This is where I'm looking to get involved during a specific time window where big moves happen consistently. This is how I can trade my strategy on the move as well while traveling. I've designed this strategy so that all the thinking has been done by creating all the rules before we even get into the session and understanding the direction before we even get into the session, so that when you do come to the session, you can just focus on seeing the setup in the direction and just executing. So now down onto the 15-minute chart, we know we're looking for buy setups during the session. What else can we see? We've also got equal highs here. Equal highs can become a target following that bullish intention to the upside. Liquidity is always a target following an intention. So if the intention's already built here, sideways range, initiation, mitigation, continuation, then we're just looking for liquidity to be used as that target to the upside. So now all I'm doing is waiting for the session, and then all I'm doing is looking for a fractal low to be created in the market, which is my setup, and that shows volume coming into the market. So let's just play this forward. So price has now already created that fractal low within the market. All I'm doing is looking for this price delivery. I'm looking for price to manipulate a low, which gives an opportunity for volume to be created in the market, and then I'm looking for a move in the opposite direction. So now session's about to start, and we've already seen that manipulation happening. When the banks are buying or selling, they sell before they buy, or they buy before they sell. So if we can understand that volume has to be taken before a big move happens, and they have to sell before they buy, the next phase of price after a sell to buy is potentially going to become that initiation phase in the market. This is where the big moves can happen in the market. This is my setup. This is what I'm always looking for during my time window. So the session's about to begin now. We can already see buy orders start to come into the market just by looking at the candles. And for me, I'm waiting to see more buying coming into the market, and I have a specific set of rules on how many candlesticks I'm looking for during my session window, and then that is my execution. Because I'm entering after candlesticks close, we can already see the volume coming into the market when the candles start to move to the upside. This is so that I don't have to guess a specific area. The market's going to show me when it wants to move in that direction. And my stop loss is always going to be 10 pips. I always have a fixed stop loss. This is how I don't have to think in the moment. Again, all the rules are created outside of the moment, outside of the session. So I can focus on just executing when I see a specific candle. And I can do this anywhere. I could do this from my phone. As long as I understand the direction, which can be built the day before, it can be built on the day. I need to be watching the charts during my specific session window. I need to see my candlestick formation after manipulation, and then I can just execute with a 10 pip stop. And if we just play it forward, this is a trade that just absolutely exploded to the upside and ends up hitting take profit very quickly. Doesn't always happen like this. Sometimes it takes its time to get to the take profit, but that's just a variation of the market. And if we just come back over to the 12 hour as well, and we look at the sort of candlestick that we got, we can see at this point of mitigation, this is where we anticipate those continuation phases coming into the market. And if we think about volume coming into the market on the higher time frame, this is the low that we've run below. That's the manipulation happening, which we can see as this low on the 15-minute chart. That gives an opportunity for new buy orders to come into the market at a point of mitigation, and then we see the buy orders coming into the market here. So if I wanted to trade on the 12-hour time frame, for example, my execution would obviously be a lot higher. But again, this is showing the volume coming into the market. So I don't have to wait and predict every single location. I can react to what the price is showing me and then get involved in the move. This takes a lot of the thinking away from trading and a lot of the errors away from trading and makes it a more mechanical approach to the market. And this makes it very easy to be consistent in the market because all your processes are predefined. This entire strategy is available to learn at notjusttotrade.com. I'm also creating a course for the 15-minute chart so you can understand every single process that I use to execute this trade system absolutely perfectly. Also, if you have a look at my Instagram, you can see the before and after when I talk about trades or moves before they even happen, utilizing exactly the same entries and exactly the same concepts that you've seen in this video. Thank you guys for watching, and we'll catch you on the next video.